Wednesday, February 22nd, 2023, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at the probability, because this is just speculation on my part, of China actually deploying its secret gold stash. Seeing that tensions are ratcheting up, geopolitical tensions amongst NATO, Russia, and now China. So that's what we're going to look at today. Over the years since I started this channel in 2015, many of you have asked me where to buy gold and silver. So what I've done is built relationships with bullion dealers that I have dealt in the past. And I've provided promo codes, referral codes for people who are interested. These bullion dealers that I work with, I trust them 100%. For example, here in the UK, I work with Gold Investments. I started dealing with Simon and Oliver's father back in 2002. It's a family-run business. They've been in business since 1981. So that's Gold Investments. I also have a relationship with Glint. And Glint, of course, is slightly different because they hold your gold in an allocated vault in Switzerland, Brink's vault in Switzerland. And they provide you with a MasterCard through which you can spend your gold. And there's also the GlintPay app. I personally prefer physical, but I do have some Glint. Some people prefer Glint. And recently, I've started working with ITM Trading and Lynette Zhang and her team. They will provide you a free consultation if you've never bought gold. They will help you with strategies on how to preserve your wealth and maybe even increase your wealth through precious metals. And also with Andy Schechtman, I have a relationship in the United States, of course. One final word, don't take my word for granted. Do your own due diligence. Find who you think is the most reputable dealer and a dealer that can give you the best price. But these are just the ones that I like. And if you want to know more about them, there's more details in the description of this video. So back to China and the geopolitical situation, the tension ratcheting up. I mean, we have spoken about this even prior to this year. Last year, there's a lot of speculation what would happen, that China could be worried about losing its reserves as well. China has a lot of reserves, and we'll look into that in a minute. So you can see here, U.S. ambassador to UN warns China would be crossing a red line if it provides lethal aid to Russia. We've got Blinken as well talking about China. Ukraine war. Blinken says China might give weapons to Russia. And we've seen as well a lot of activity as it relates to the countries in Asia, Japan, Philippines, Australia, US trying to build some kind of coalition to fight the Chinese with regards to Taiwan. And yes, what else have we got in terms of news as it pertains to China and also the global south? Well, the other day we had this Munich security conference on the weekend, last weekend. And the FT even reported this. It says, Western pleas over Ukraine failed to sway African and South American leaders. So this global support for Ukraine is not there really, and it's not that they like war, these people, they just don't want to get involved. The other thing that's come out today, China's top diplomat and Putin's security chief meet and condemn unilateral bullying. So this is what it says here, and this is from the FT as well. China and Russia agreed to oppose all forms of unilateral bullying and promote democracy in international relations during a meeting of Beijing's top diplomat and Vladimir Putin's security chief in Moscow on Tuesday. China's state-run news service Xinhua said. The meeting between Wang Yi and Nikolai Patrushev came after the Chinese diplomat attended the Munich Security Conference at the weekend, during which Beijing revived efforts to portray itself as a potential peacemaker in the Ukraine war. And it goes to say as well that the meeting between Wang and Blinken, they met in Munich, was the first face-to-face encounter between high-level Beijing and Washington officials since the U.S. shot down a suspected spy balloon that floated over North America this month. Both parties believe that peace and stability in the Asia-Pacific region should be firmly maintained, and that the introduction of Cold War mentality, bloc confrontation, and ideological conflict should be opposed. Xinhua said of Wang's meeting with Patrushev. So the Chinese and the Russians are basically saying, leave us alone. Let's act democratically and cooperate internationally. Let's not bring in a new Cold War. So that's how China and Russia feel. Am I judging any country here? No, I'm just trying to tell you what's going on. So we know, of course, that when Russia crossed the West's red line last year, Russia's reserves were frozen, and it wasn't a surprise that the Global South, mostly the Global South, central banks bought the most gold since the Bretton Woods system. Yes, the World Gold Council has revised the purchases, and they said there could be further revisions recently, because prior to that they said it was the most purchases since 1967. And why are they doing that? Well, because they know that something is up in terms of it's not going to be a unipolar world anymore. It's going to be a multipolar world, and the US dollar will not be as important, just like the British pound sterling lost a lot of its importance after World War II. Am I saying we're going to have a World War III? I don't know. I'm just trying to look at the numbers right now. And of course, China has a lot of reserves. So we'll go through that, and we'll go through the gold story as well, of course, because this is what this video is supposed to be about. So in terms of treasuries, U.S. treasuries, China has had 867 billion as of December 2022. Those are the latest numbers provided by the U.S. Treasury, the TICS data, they call it. As for total foreign reserves, as of December 2022, they had $3.12 trillion of foreign reserves. The Chinese don't provide the breakdown, and that's like a secret. But most people think that US dollars is around 60% of that. The rest would be euro, yen, and sterling. And in terms of GDP, those $3.12 trillion would represent about 17.6% of Chinese GDP. So why am I looking into these reserves? Well, because China seems to be, you'd think they're playing with fire, that they could get those reserves frozen, especially seeing that they're mostly in NATO countries. I know Japan is not a NATO country, but it might as well be, right? So bear with me. Let's look at the gold now. So we know that there's been a lot of speculation, of course, that China has a lot more than the 2,000 tons of gold that is publicly out there, official data. They've been announcing, of course, in the last few months, the last 3 months, which is very unusual, their gold purchases, and they're pretty big. But I found an article here from the 3rd of March by Dominic Frisby in Money Week. It's a UK magazine. China almost certainly owns more gold than the US. Here's why that matters. So Dominic Frisby quotes people like Alistair MacLeod, Ross Norman of Sharps Pixley, who's a quite well-respected gold market analyst, and both of them and others have come up with numbers like 20,000, and Alistair McLeod has come up with even 30,000 tons. I'm not going to go through through the whole article, how they came up with those numbers. You can read that if you want. I'm going to put a link to this article below in the description. It's under archive.ph because there's a paywall, of course, behind Money Week. But yeah, they seem to think it's a lot more. So would China really give up on its foreign reserves? Well, it's possible, and I've gone through the numbers. So official gold reserves, of course, are 2,000 metric tons. And at $1,850, that would mean just under $119 billion in gold reserves, which of course is doesn't really match the 3.12 trillion, right? It wouldn't be a good alternative. But if you go up to 20,000 tons, which is what a lot of respected gold analysts think they have, it would be just under $1.2 trillion worth of gold at $1,850, of course. And then if you use the 30,000 ton number, it's like 1.78 trillion. But I think we need to look at a higher price as well, because if China were to abandon its US Treasury reserves and other reserves, it might sound horrible for the Chinese, but I think it's horrible for the US and Europe and the UK, because it means they don't they think your bonds are worthless. They don't care. They've got the gold. I think it would be highly significant, actually, and it would put a rocket up the gold price. And is that why I'm talking about this? Because I want the gold price to go up? No, because my philosophy is to try to stack as much gold and silver as possible. The fiat price doesn't matter, because in the long haul, you want to have real money. But be as it may, we need to look at this, of course. So let's say theoretically the price of gold shoots up to $3,000. So the 2,000 metric tons would be worth just under 200 billion. Still not great, but if they had 20,000 metric tons, it would be just over 1.9 trillion, and 30 trillion tons, it would be 2.9 trillion. So 2.9 trillion is a lot more like 3.12 trillion. And I think the Chinese wouldn't be risking their reserves like they are now, in my opinion, if they didn't think they could withstand losing their reserves. And why would they think that? Well, because they've seen how Russia has handled it, and I think they can handle it as well. And I think they know that the rest of the global south is behind them, especially seeing that they've been buying gold, and especially seeing that a lot of other countries want to join the BRICS. So I wouldn't put it out of the realms of possibility of this happening. Am I saying this is going to happen? No. What would be the odds, I think? Well, I think they're relatively high, at least 25% chance. That's my opinion. And this is not, of course, financial advice, but I think things are getting very interesting, and we need to keep an eye on the markets, of course. Yesterday we had according to the FT, US stocks, worst day in 2 months on rate rise worries. Yes, we're starting to see bond yields go back up. And that kind of makes sense with what's going on in the world. And with that, let's quickly look at the markets now. So we've got spot gold at 1836.50. That's up just over $1. High's been 41 and the low 32. I would say gold and silver held up fairly well yesterday, despite the big drops in the stock market. Yes, the mining stocks got hit, but that's a different story, of course, the mining stocks. They will be thrown out of the bathwater so to speak, along with the other stocks when things get a little bit hairy. So the Dow futures up 5 points, S&P is up 1. So yeah, the stock market futures are pretty steady right now after the big drops yesterday. To the currencies, we got sterling down 1/8% at 120.96. We got the euro unchanged, 106.52. The dollar is down 1/4% versus the yen, 134.69. I saw a story from overnight that the BOJ had to step in and buy JGBs to defend the peg. So that's going on in Japan as well. And the dollar versus the yuan, dollar's up 1/8 at 689.90. Let's check out the other currencies here. Aussie dollar is down 0.5%, 68.19. Dollar's up 1/8 versus the Canadian at 135.50. And the Kiwi dollar is actually up versus the dollar about 0.1 at 62.22. To the general commodities, platinum is down $2, trading around $940. WTI crude oil is down 1% at 75.60. Brent crude is down 3/4 at 82.10. And high-grade copper is down 1.3% at 4.15. Let's check out the bond yields. The Treasury market yesterday, yields spiked quite a bit. I think about 10 basis points across the curve. But right now, the 10-year is down about 2 basis points, around 393. Yes, as I said, the Japanese 10-year yield was trying to break out. They stepped in, so right now it's at 0.5. BOJ continued to do QE. And UK as well. I mean, we saw a huge move yesterday in UK gilt yields, about 20 basis points across the board. We're seeing the 2-year approach 4%. It's now at 3.95. So that doesn't bode well, I think, for the UK economy, especially the housing market. 10 years up another 5 basis points at 3.66. And the 30 years broken through 4%. And yesterday we had the budget deficit numbers for the UK, and it was a surplus. And apparently that was a big surprise, but usually, as you can see by this chart here, there's a surplus in January because that's when people pay their taxes. They have to January 31st for the previous tax year. There you go. With that, I'm going to wish you all a very good day. Take care. Bye.